Welcome back to another video, and in today's video I'm just going to hop right into it and get into what I'm seeing in the market and how I personally handle the market through these tough times. So we are having a down day again today, but I believe we're in somewhat of a kangaroo market where there's no real clear direction, so you really can't play either side at the moment, which is why I'm focusing mainly on my long-term portfolio and just adding on dips of my favorite growth companies. And I believe we're going to trade like this until the following happens. So Jerome Powell does speak tomorrow. He's going to touch on the state of the economy. He's probably going to touch on bond yields and hopefully put some positivity out there. So I'll definitely be listening, and I'm sure the whole entire stock market's going to be paused watching him, speak tomorrow, and we'll see how the market reacts. Obviously, we need stimulus, hopefully before March 14th. That would really help us out. Need bond yields to go down, and institutional investors are actually starting to buy this dip, which is a good thing. And I will touch on the squeeze metrics chart in a second. I do think this is a good lesson for newer investors, and the market has been running crazy this last year. So a lot of momentum stocks, a lot of SPACs, penny stocks, meme stocks. So that's when going back to doing real DD and research and having conviction over solid companies is very important, especially for the long term. And, on red days like this, when your portfolio is bleeding, having those convictions over those stocks, you just look at them as a sale instead of panic selling. So that is very important. And we are seeing a bit of rotation out of tech, or a bit of a correction, especially in tech, and rotation towards those recovery stocks, which we knew would happen. But I don't think tech is just going to completely die. I do think, we're going to correct, and then people will end up buying tech again because that is the future. So really not worried about it. Now let's go check out the squeeze metrics chart. Okay, so this is the Darkpool chart. This is squeeze metrics, and the blue line is the big institutional investors, also known as smart money. Green line is S&P 500. So you can zoom out to March 2020, and you can see just how heavily they were buying during those crazy times when everyone was panic selling their stocks. And this is the rich getting richer right here. And I do try to think like an institutional investor now and not emotionally. So you can see the last couple of days, they've actually started scaling in on this dip, which is very bullish. And I do like checking this chart. They're not always right. Like you can see here, they did buy the top there. But as we are dipping and people are panicking the market and everyone's posting the next stock market crash, panic selling their stocks, the smart money is actually buying those stocks up, scaling in. So I understand that the dip keeps dipping and people are running low on buying power, but this is why I'm just scaling in every single day, just buying in waves, my favorite stocks that I have conviction over, because you can't really time the bottom. And if you go back to March when we had the dip, or even October, we had a couple dips in 2020, and how a lot of people wish they would have bought more. You just can't be so fearful during these times. You just need to buy your favorite stocks that you have conviction over, because you will regret it in the coming months and years when you zoom out on the larger chart and this is just a small little dip in that big chart and you wish you bought more. So try not to think so emotionally. Don't let all the news and fear get to you, and just buy your favorite stocks. All right, so if QQQ goes to the low 300s, I believe it's around $303, that will actually be a 10% correction from this high of 337. So that'll actually be pretty positive. We did want a correction, and now we're getting a bit of a deal on some of our favorite tech stocks. Just so happens that when deals like this come, a lot of people get too scared to buy them. So like I said, we look back to March, a lot of people were too scared to buy. I bought, I just didn't buy enough. And then if we look over at SPY on the 1 year, there were multiple chances to buy dips, and a lot of people didn't buy in March. And then there was another one, I believe in September, there was a bit of a dip, and in October. So these are the times you want to be buying, because even if you bought the top September 2nd, say you bought the top on September 23rd, you are feeling like crap. You're like, why did I buy so much at the top? But look at the long term, you ended up profitable. So that's why you have to have these long-term outlooks. So even if you just loaded up on February 16th on your favorite stocks and now they're all bleeding, you don't need to panic sell. You don't need to freak out in the long term. So what was that? A couple months later, you're already profitable and up on all those. That's how I like to look at it. This dip is probably just going to be a little blip in the entire chart, and things are going to be okay. So a great example of having conviction over a stock and a company is like me with IPOE SOFI. Now, I've been talking about this one for a while. This is my favorite SPAC out there, and I'm definitely down on my position. This one has been bleeding for a little bit, as well as the whole market, and definitely SPACs. But, I just look at this as a discount because I have a long-term outlook for this company, and I think at its current price, it's an absolute steal. Couple of reasons I'm bullish on them. They have a lot of catalysts coming up. So the merger vote is actually now expected to go down in early April. So originally it was Q1, but obviously just delayed a little bit. They will give updated guidance. They have acquisitions coming. So the CEO, Anthony Noto, said that they're going to use the money from the SPAC for acquisitions. They have the bank charter, which means that they could get final approval to operate a bank, which could add close to $1 billion in additional adjusted EBITDA through 2025. They expect to grow revenues sixfold through 2025. Their current 1.7 million customers are actually on track to grow to 3 million customers by estimated 2021. They are taking up 90% of new Neo bank accounts opening in the US and compound annual growth rate of 43% over the next 5 years. So I could go on, but as you guys know, having conviction over your investments is very important because while this stock is bleeding, I'm thinking about all these upcoming catalysts and long-term outlook for this company, so it doesn't affect me at all. And now getting into some other growth stocks and how I prefer to buy stocks in a market like this. I like to set buy triggers for different, companies I want to get into or add to. Now, for something like Teladoc Health, my average cost is so low, same with Tesla. It's much lower than the current prices, so it may never reach to where I can dollar cost average down. So I just set buy triggers. So I recently bought Tesla around $630 and then it went back up and now it's approaching that again. So maybe I would buy Tesla again under $630. But no matter what, Tesla is going to be a great play long term. Neo, I really liked under $60 or even $55, and now it's around $40. So why would I not love it at that price long term? Neo has a lot of growth ahead of them, and they are just, battling a chip shortage right now. Their earnings guidance wasn't as good as people expected, so they're just, taking a hit along with the rest of the market. But if we come back to this video over summer, I'm sure buying Neo now would be the right decision. CRISPR's another one that's really cool. Made a video on them. They've sold off quite a bit, and under 120 is an amazing, place to buy this one. And then maybe I'd set another buy trigger under 110 and then under 100. Just that's how I like to buy in waves. Next up, Palantir. I like this one in the low 20s. Got a bit of a pump today after hours, I believe, from CNBC, but this one's a pretty good buy in the low 20s. Very bullish on them. Apple, low 120s, under 120. That's a great place to buy this one. This is in my retirement account. Not so much a huge growth stock, but a safer growth stock. Amazon fell under the 200-day moving average, I believe, so around 3,000. It hasn't been around $3,000 in a long time. Now, I don't own this one anymore. I did sell my Amazon on its last pump to around 3,400, but under 3,000 I think is an attractive place to buy this one, so it's definitely on watch again. Lemonade, I had this one in the 50s, then it pumped up like crazy, and I actually swung it, sold out of it. I just thought it was a bit too overvalued for me. Since then, I was patient, and it finally fell down, all the way down to near $100 again. So I did start a small position, and we'll see if this one goes into the 90s or even less, and then maybe I can build out a better position again. Airbnb, I still want this one to come down, but long term, I think this is going to be an amazing growth stock. So I did scale into a position very small right now, but if it continues to fall, then I'll continue to add heavier. Then some other ones that I'm also watching is Butterfly Network, Tattooed Chef, Desktop Metal, Open Door, IPOF, BTWN, PSTH, and BFT. So a lot of stocks I'm watching, but like I said, just being very picky, buying in waves, and that's where I'm at so far. That's pretty much it, guys. Just a bit of a ramble again today, but this is how I look at the market, and it's really helped me in the past dips. And we're probably going to look back on this and see these prices as pretty attractive on some of our favorite stocks. So, I'm no expert. This is just how I handle these days, and I try to, invest without emotions and just have that long-term growth outlook on these companies. It's really helped me so far, and hopefully, things get better in the coming days and weeks. But I hope you enjoyed the video. Please like and subscribe, and have a good one.